let's talk a little bit about the current state of play in tech, media, comm services, that technology trade overall. There are places now where people say things have gotten bad enough to where things could be attractive. Are you seeing it that way, and if so, where?
Yeah, I mean, I think you can argue that. I mean, what you have seen, over the past, say, like month or two, there's a lot of cost cutting happening across the board, right? You had a lot of layoffs. I would call it the first phase of downsizing or right-sizing these type of companies. Likely, you will see kind of like a second phase coming where you go beyond discontinuing some like ancillary businesses, like think about like Facebook's portal or Snap kind of like getting rid of the Pixie drone and so on. You're rationalizing the business further, and likely there's a third round of cuts coming, but only if we're kind of like entering into a deeper recessionary period where we all hope we're not getting to. I mean, I would probably say that when you look at the overall ad market, which is what I'm focusing most of my time on and where most of the big tech names also fit into, the best proxy that you can have looking forward is looking at what ad agencies did in 08, 09. You saw 08, when the year Lehman went bust, literally still being a very good year for them. 09, they were all declining by 10% if you adjust their top lines for M&A that they had done in this year. We're now forecasting that also the ad market is likely declining by some 8% in next year, and that's digital ads. Major reason for that is you have an FX impact coming towards us, which may be 2 to 3 percentage points of that 8%. And on top of that, you have demand destruction. Think about all the crypto ads out, all the VC-backed grocery store apps being out of the game. You have gaming apps still facing further headwinds from SDK runtime kicking in on Android, similar to what happened on Apple with ATT. And you also have some demand deferral. Think about like electric vehicles. They don't even have inventory to sell anymore, which means they're pulling brand spend towards the end of this year and into the next year. That's kind of like the current state of this market. The only sweet spots that we're really seeing is retail media and is CTV as non-cyclical growth territories in here.
All right, so if we talk about the digital ad market as you just laid out, one of the things that we saw earlier this week was a stock that we don't talk about often at all. It's a very small cap stock. It's called Taboola, but right. It's a name that is very much entrenched in native online advertising. And Yahoo, which is privately owned now by Apollo, has now taken a 25% stake in Taboola. Some will say that is this a perhaps commentary on a maybe bottoming process in digital ad, kind of the market overall, if you have buyers now willing to step in and take stakes in companies like a Taboola? Or is this just a symptom now of maybe people saying, hey, we just need to get a presence somewhere, and this is where we need to spend?
Yeah, I mean, I'd probably say that the further you are going into these kind of like recessionary periods, you also get to more rationalization. And you have similar functions across probably 15 to 20 ad tech companies out there. Some of them will join forces. We have seen that, looking back at the growth deceleration that we had in 2018, you have seen a lot of these smaller ad tech companies being snapped up. Think about like Millennial Media going into AOL and Yahoo snapping up a lot of these companies at the time. And I think that's similar to what we're seeing with Taboola and Yahoo here as well.
Now, when it comes to the beatdown that we've seen in certain tech, media, and telecom stocks, social media has been, of course, front and center there. One of the names, and I will put this out there because it was our mystery chart, we teased it. This is Pinterest.
Right.
And Pinterest is not a name that people think about perhaps right off the top of their head when you say social media. But is this a stock that you like, given the fact that it's lost a third of its value year to date?
Yeah, and it's debatable if it's actually social media or not, right? I mean, 50% or so of the revenues that Pinterest is doing is more like a search-related or search query-related advertising revenue that they have. And what we think what's can actually happening while everyone is talking about a new CEO coming on and being capable of building a fully fledged ad tech stack within the business, I think we can go a step further. It is an ex-SVP coming in from Google, having scaled a business, a shopping business, to $30 billion there. He could just come in and enter like a partnership with Google, opening up some of that 50% of revenues, which has come from search queries, to Google's AdWord business, bringing in millions of additional advertisers, increasing density, and with that pricing. And ultimately, you are juicing your top line massively by increasing the number of advertisers, likely by 20 to 30-fold on that platform.